This is Nightly Business Report with Tyler Matheson and Susie Garrett. Funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
Blockbuster gains. Employers were hiring last month, adding more workers to their payrolls than they have in years, putting 2014 on track for the labor market's best 12 months since 1999.
New records, and as the Dow closes in on 18,000, our guest tonight still finds value in this market.
And battle against bacteria. Meet the entrepreneur who's shining a light, a very bright one, on a growing problem in the healthcare industry. We have all that and more tonight on Nightly Business Report for Friday, December 5th.
And good evening, everyone, and welcome. Now, the job market is partying like it's 1999, and with good reason. Not since that year has the U.S. economy been on pace to add so many jobs over a 12-month period. Today, the data crunchers, formerly known as the Labor Department, reported a spectacular November employment report. 321,000 jobs were added last month, about 90,000 more than economists expected. And the gains were widespread across many, many industries. The national unemployment rate held steady at 5.8%. Hampton Pearson now takes a look behind the numbers and what they mean for the economy, interest rates, and you.
Employers hired the largest number of workers in nearly 3 years in November. Job gains have averaged 278,000 for the last 3 months after upward revisions to September and October data. At the White House, President Obama unveiled his own job scorecard.
So far this year, over the first 11 months of 2014, our economy has created 2.65 million jobs. That's more than in any entire year since the 1990s.
Job gains were broad-based, with employment in professional and business services surging by 86,000. Retail payrolls increased by 50,000 as employers stepped up hiring ahead of the holiday shopping season. Healthcare and manufacturing were also strong performers. It's a foundation, according to leading economists, for improving overall growth.
This is really an improving economy. Unemployment rate down at 5.8%. That's below its 50-year average. We've added 241,000 jobs very smoothly per month this year. This is a very, it's not a completely healthy economy, but it's improving very rapidly here.
The length of the work week increased to an average of just under 35 hours, the highest since the early days of the recession. And average hourly wages, now at just under $25 an hour, had their biggest one-month surge in more than a year.
So it's not only the jobs, it's the hours and it's the wages. Everything is moving into high gear now, and it feels more like a boom economy than even a strong one.
Employment experts say breaking the 300,000 barrier for monthly job growth sets the table for higher wages. Leading economists believe the Federal Reserve will want to see more than 1 month of blockbuster job growth with wage hikes before moving up its timetable for raising key short-term interest rates. For Nightly Business Report, I'm Hampton Pearson in Washington.
On Wall Street, investors were encouraged by that blowout jobs report, sending stocks higher and pushing the Dow and the S&P to new records. The Dow rose 58 points, and it's moving closer to the 18,000 mark. The Nasdaq up 11, and the S&P added 3 points. Today closes the books on 7 straight weeks of gains for the Dow and the S&P. For this past week, most of the major averages were higher, with the blue chip Dow leading the pack, up 0.75%. Now, while stocks rose, oil prices dropped once again. West Texas crude down nearly $1 a barrel, closing at $65.84. That's the lowest price since 2009. Benchmark Brent crude also fell to $70.15 a barrel, a 5-year low.
Rebecca Patterson joins us now to talk more about the markets and today's jobs report. She's Chief Investment Officer at Bessemer Trust. Rebecca, we're going to get to the markets, we're going to get to the jobs report, but I want to talk about something we have not mentioned just yet, and that is the fact that the dollar hasn't been this strong in about 8 years. Dollar index, 8-year high, 7-year high against the yen, 2.5-year high against the euro. What do you think about that, and does it worry you at all?
It doesn't worry me yet. Right now, I think the dollar is a good thing. It's hard to believe this, but just in 2011, the dollar, if you look at it against a basket of other currencies, was the weakest it had ever been since it started floating in the 1970s. We were really cheap currency on a global basis. So now we're getting back closer to long-term averages, but the dollar is still cheap. It can still keep rising. Right now, this is great news. It helps the purchasing power for U.S. consumers. It helps keep a lid on inflation in America, which means the Fed can move more slowly, and that's good for stock markets. So right now, it's great. I think if I look out a year and a half, if it continues, especially if it continues quickly against a lot of currencies, then we have to keep a close eye on U.S. exporters, especially manufacturers, to make sure they don't start getting noisy and it becomes a congressional issue into an election.
All right. Rebecca, you mentioned the Fed, and of course, we're all wondering what Janet Yellen and the other policymakers at the Federal Reserve, how they view this report. They have a meeting coming up pretty soon. What do you think?
Well, it's interesting today because even though we had a great report and the market priced in a higher probability of the Fed raising rates in June. Right now, the market's discounting a 75% chance that we get a rate hike by the June meeting next year. So even with that expectation, the fact that stocks ended higher to me is really good news. Will the Fed take rates higher in June? I think it's possible if we get a few more good jobs numbers and wage gains continue to slowly rise. But if we get the jobs and inflation stays muted or even eases further, thanks in part to commodities, I think the Fed's preference would be to go as slow as they can to ensure that this economy is really self-sustaining.
Does the fact that the market rose today, or at least the Dow did rather strongly, does that suggest to you that we've kind of gotten past the point where we're so worried about the speed and timing of a rate hike in the future?
It definitely helps suggest that, Tyler. I do think when we get to that Fed meeting where they take out the words considerable time, i.e. they're saying to us, a rate hike's coming, we might get a little jittery in the market. When we actually get to the Fed hike, historically, stock markets have paused during that period for a few months. But the Fed doesn't want to leave anything to your imagination.
All right.
So I think they are trying to pave the way so this is a non-event for the market.
So we're coming close to the end of the year. Give us your outlook for 2015 when it comes to the markets. Higher, lower, the same?
I think we're going to have another good year for U.S. stock markets. And because of that strong dollar, even if other markets overseas do well, investors need to be cognizant of the currency weakness and what that means for their return. So we're still very overweight the U.S. We're a little bit overweight Japanese stocks, but we are trying to remove the yen from the equation for our portfolios. I still want to be underweight fixed income. Even if yields rise slowly, I think our better bet is still in stocks. We prefer large cap.
A lot to think about there, Rebecca. Thank you. That was a full tour of the world right there in about 30 seconds. Rebecca Patterson with Bessemer Trust. Thanks so much.
Take care.
More now on jobs. And for the last 11 months on Job Fridays, we've been asking where the jobs are. And we find them everywhere in the country, although in this profession, employers are focused on the sky. Mary Thompson explains.
The skies may be friendly, but there's a constant need for those who keep the order, air traffic controllers.
They have to be hired before their 31st birthday. They're required to retire at the age of 56. That's why the job marketing will keep going on.
Gail Slotky runs the aviation program at Middle Tennessee State University. She cites two reasons for the strong demand. The FAA is catching up on hiring after last year's sequestration, and many of the over 14,000 current controllers are close to retirement, having been hired after massive layoffs following a strike in 1981. The FAA's hiring plan calls for it to add over 1,700 new controllers by 2015, almost 6,400 in the next 5 years, and over 10,000 in the next decade. In the past, two key sources provided the FAA most of its candidates: the military and 36 schools that made up its collegiate training initiative, schools like Long Island's Dowling College.
One I look at is focus. You only want to take a look at situation awareness, and another one's multitasking. And you have to have a person who's not going to panic.
Top graduates of these programs typically earn spots in the FAA's 4-month training program, but they're no longer given preferential treatment. Now the application process is open to the public, who must meet certain qualifications and pass a new biographical test. The change not slowing down Middle Tennessee student D'Angelo Blair, whose love of speed brought him to study aviation.
I had in mind I wanted to fly jets and airplanes, then I couldn't really just afford it, so I moved on to the air traffic control side.
The FAA didn't respond to calls and emails asking about the new system's success or why it was changed, but a degree from Dowling did pay off for graduate Saja Lindsay Sudlow. She's been accepted to the training program and is looking forward to a job she's wanted since working at an aviation museum in high school.
The great thing about it is you can get a job anywhere in the continental United States.
The jobs pay well. After a few years of supervised on-the-job training, the salary can be in the six figures, and that's not a bad job to land. In Shirley, New York, I'm Mary Thompson, Nightly Business Report.
To read more about the demand for air traffic controllers, go to our website, nbr.com.
And still ahead, how government requirements for licenses, registrations, and certificates may be holding back hiring in some industries. The details coming up. Even though the U.S. is on track to add the most jobs in a single year since 1999, cumbersome regulations are being blamed for getting in the way of creating even more jobs. Steve Leisman takes a look now at how licensing requirements impact hiring.
What do a florist, a manicurist, and an interior designer have in common? And no, this is not a dumb bar joke. Give up? They're all jobs for which somewhere in the country, and sometimes many places in the country, the government requires a license, registration, or certificate to go to work. And yeah, in some states, even bartenders need a government-sanctioned piece of paper. Licensing, certification, and registration requirements have soared from 5% in 1950 to now covering a third of all U.S. workers. Economists like University of Chicago's Stephen Davis increasingly point to such local, state, and federal rules to explain why the U.S. job market has taken longer to rebound.
New business formation, job-to-job mobility, recovering from a lost job, growing businesses in a way that they could hire other people. All of these things are constricted and restrained by unnecessary occupational licensing restrictions.
Now, economists don't dispute the need for training and education, especially when it comes to jobs like nurses or paramedics, where the providers take your life in their hands. Trouble is that in places like California, a job such as an emergency medical technician or EMT requires less training than, for example, an interior designer.
They are, to some extent, incumbent protection devices. They often do serve the purpose of driving up wages for the incumbents, but they do that in a way that's harmful to competition.
A report co-authored by Princeton professor Alan Kruger, President Obama's former top economic advisor, found that licensing and registration can be linked to 18% higher wages. In California, an interior designer requires serious professional experience, up to 2 years working in an apprenticeship. But those rules are defended even by 25-year-old Allie Dahl, who is slogging her way through the process.
For my job, for the buildings that I work on, I think it's important and necessary to know.
Dahl says an interior designer working on a public space like a hospital has to know the rules to keep the public safe. But the economist would question whether all those requirements are more about making the public safe from bad providers or the profession safe from competition. For Nightly Business Report, I'm Steve Leisman.
Big Lots losses narrowed, but not enough, and that's where we begin tonight's Market Focus. The discount retailer's results missed, but it did manage to chalk up a third straight quarter of same-store sales growth. It also hiked its outlook for the current quarter, but investors weren't convinced. Shares plunged 16.5% to $40 a share. Northrop Grumman rose to a record high after the company was added to Goldman's conviction buy list. The defense contractor also authorized a $3 billion buyback. Shares popped 5.5% to $147.69.
Francesca's CEO is resigning after 2 years on the job at the struggling retailer. He's going to be replaced by the former chief of Signet Jewelers, a move investors cheered, and how shares popped 30% to $15.09. JP Morgan retained its crown as the top-performing investment bank. That, according to new data revealing the company's revenue of more than $17 billion year-to-date. Goldman came in second place. Shares of JPM up 2% to $62.70.
Our Market Monitor guest tonight says he likes the stocks that are out of favor on Wall Street. He's Greg Abella, portfolio manager at Investment Partners Asset Management. Greg, nice to have you back here on the show.
Thanks for having me.
Well, let's start off just talking a little bit about today's markets, this jobs report. Does anything that you heard today change your investment approach?
No, not so much. I think that the market got it right today. There wasn't a surge of 500 points in the Dow or 30 points in the S&P. It was a moderate reaction, and I think that we're already sort of priced for perfection. So
business as usual for you and your portfolios?
No, well, I think this is time that you start to look at the laggards. In the S&P, there have been 11 sectors, and one is super underperforming, which is energy, and the rest are doing fine. So maybe it's time to bottom feed.
You like value. You like to look for it. You like to look for the things where other people aren't looking. And your first choice tonight is a European hedged equity ETF. That would be a value play right now. Why do you think Europe and this big cap-oriented ETF is poised to move up?
Okay. Well, we're coming out of QE. And
they're going in.
And they're going
apparently.
in. Apparently. And I suspect they'll have to, as long as they get all the countries to agree. So if that's the case, you're going to have a euro which weakens. You're going to have cheap energy prices, cheap labor because their labor markets are so weak, and cheap capital because rates will be low.
And the weak euro is going to help their exporting companies.
Correct, and that's the theory. So companies that are in that ETF like Siemens and Sanofi, Unilever ought to do really well, especially if our economy does better, we'll be importing those products.
Greg, when you were here over the summer, you were talking about ExxonMobil, saying that this was a good stock to own. The stock at that time was trading around $103. And you said when it gets low enough, time to buy. Today, it's at $93, and you're recommending it now.
Yes.
How good can it get with Exxon?
Okay, well, this is not a play, I think, where you're going to see something occur immediately. But with energy prices this low and so many energy companies struggling, especially if they have lots of debt, they're going to have to sell properties. So the big criticism with Exxon has been they're not growing their production fast enough. So they could be the mothership that all these properties wind up moving into. They have a solid balance sheet, decades of history. It's just it's a logical progression for.
Do you have a target price on Exxon? It's at 93 now.
Well, going out about 18 months, I think you could see a 10 or 15% higher.
All right. I'd rather be Exxon in a falling market than one of the smaller producers or one of the highly leveraged ones.
Correct.
Your third choice is called Memorial Production Partners. It's a master limited partnership with a 16% yield. Often, when I see yields that high, I go, whoa, wait a minute, that's a problem. In this case, because of the structure, I assume it is absolutely not.
Well, of all the MLPs, and they've been very popular with retirees, of all the MLPs, you're going to want ones that have their production hedged so that it's not going to hit them as hard. This firm was smart enough to hedge their production not out a couple of years, out 5 years. So they got resoundingly criticized for that because they're going to miss the upside, but then prices cratered. So they're locked in for years, selling their products at higher prices. So I don't know if they'll be able to maintain that dividend at the same rate going forward, but they're in a way better position to pay than other MLPs that did not hedge as much.
Okay.
All right, interesting choices.
Yeah, very interesting choices. Thank you so much for coming by. Have a great weekend.
You. Thanks so much.
Greg, good to see you. Teach me how to tie a bow tie next time you come. Okay?
Will do.
All right.
Thanks.
Greg Abella with Investment Partners Asset Management. Thank you so much. And still ahead on the program, meet the entrepreneur who took her bright idea to shine an even brighter light on a big health concern and create a growing business in the process. That's coming up. The space race is back on, and the next stop, the Red Planet. A huge success today for NASA after launching an unmanned Orion spacecraft for a 4.5-hour test flight 3,600 miles above the Earth, flying higher and faster than any other capsule built for humans since the Apollo moon program. Today's flawless flight and splashdown in the Pacific is the first step toward a manned Orion flight to Mars within the next 2 decades.
That was beautiful to see. New data this week indicate the needle is moving in the right direction on reducing hospital-acquired infections. From 2011 through 2013, the number of cases dropped by 1.3 million compared with 2010. Now, it won't replace hand washing and proper cleaning, but tonight's bright idea literally shines a light on a new technology joining the battle.
This light could be pretty big, like a Thomas Edison kind of big.
We're going to change the world.
Colleen Costello's light, like so many next big things, had a humble beginning in a small house just off the campus of Rensselaer Polytechnic Institute in Troy, New York.
We were working in our kitchen, and we started to get some small electrical fires and things like that.
18 months later, just this fall, her company, Vital Vio, began selling lights that kill germs. More specifically, they kill bacteria.
There is some initial skepticism, right? I mean, it's a white light you can replace in your ceiling, and it's safe. It's never been, seen before.
And who knows when it might have been seen if Colleen's grandmother hadn't gone into a hospital 6 years ago and wound up with a dangerous bacterial infection, MRSA. It's resistant to antibiotics.
The room needed to be closed down. She had to stay there for, significantly more length of time. More dosage of medicine needed to be received.
Her grandmother's fine now, but ever since, Costello has been thinking about how to reduce the costs of hospital-acquired infections. $30 to $40 billion a year, it's estimated, here in the U.S. When she took an entrepreneurship class at RPI, you knew this one was coming. The light was turned on.
It was immediately, this is what I'm going to focus on. This is a large problem. It's worth solving.
Healthcare professionals pointed her toward ultraviolet lights, but they're not so safe for humans. Think sun damage. What's more, they bathe the room in a nightclubby bluish hue. Lights, though, are changing these days.
When I was entering college as a freshman, you could not get a commercial LED bulb at Home Depot.
In her senior year, LED lights in hand, Colleen teamed with fellow RPIer James Peterson to co-found Vital Vio.
In a room environment as designed with this full white light, in the first 90 minutes, we actually get 90% reduction in the environment.
How? In hospitals, bacteria can appear on surfaces that are touched often, like a door handle. They contain receptors that humans don't have. When light from the blue-violet end of the spectrum hits those receptors, a toxic oxygen is produced, so much that it blows up the germs. The lights use more than 200 LEDs. Computers decide how much blue is included.
We're able to take our core blue-violet disinfection wavelength, mix it with red, green, blue, and a bunch of other colors to be able to make white overall.
The computer keyboards, the mouse.
New York City's Mount Sinai Hospital is testing the lights. Richard Vincent, who's helping the hospital develop the patient room of the future, was skeptical at first, but that's changing too.
It's at a point of an emerging technology that's capturing the imagination of a number of people.
And while healthcare is the primary focus, imagine the benefits in food prep, pharmaceutical work, airplanes, and yes, public bathrooms.
We are doing something that's really important, and to be able to impact the world in a way that is going to save lives, I mean, that's something that you can get motivated around every single day.
Very cool. We wish them luck. They're just a couple of years out of college, by the way. They say they've had inquiries from as far away as Hong Kong, the Philippines, South Africa, and the UK. A couple of kids doing good work.
We're going to be hearing more from them.
Hope so.
I am sure about that. Well, that is Nightly Business Report for tonight. I'm Susie Garrett. We want to remind you that this is the time of year your public television station seeks your support.
And I'm Tyler Matheson. On behalf of your public TV station, thanks for your support. Have a great weekend, everybody, and we'll hope to see you right back here Monday night.
Nightly Business Report has been funded in part by
TheStreet.com and Action Alerts Plus, where Jim Cramer and fellow portfolio manager Stephanie Link share their investment strategies, stock picks, and market insights. You can learn more at TheStreet.com/NBR.
I'm Susie Garrett with a nightly business report news brief. A blowout jobs report for November. American businesses added 321,000 jobs. That was much more than economists were expecting, and widespread gains across many industries. The unemployment rate held steady at 5.8%. On Wall Street, that sent stocks higher, pushing the Dow and the S&P to new records. The Dow rose 58 points, moving closer to the 18,000 mark. The Nasdaq up 11. The S&P added 3 points. Oil prices fell to $65.84, a 5-year low. Clothing chain BB's is the latest retailer to report a data breach of customer credit and debit cards. And the space race is back on after NASA's launch of an unmanned Orion spacecraft, the first step on a planned mission to Mars. Be sure to tune into Nightly Business Report right here on your public television station.